Okay, let's jump right into this. Today, we are unpacking one of the absolutely most fascinating corporate evolutions unfolding right now. We're going to decode this massive, sweeping 20,000 crore rupee metamorphosis of one of India's oldest, most deeply entrenched companies. Because, this isn't just your standard business update. It's a story of survival, total reinvention, and honestly, a wildly bold bet on the future. So to kick things off, I want you to picture your pantry right now. Think about the snacks you reach for on a Tuesday afternoon, or the notebook you write in, or maybe the soap sitting in your shower. What do those everyday, completely normal household items have in common with India's absolute largest tobacco brand? Well, at first glance, literally nothing, right? But let's look at the answer. Yeah, Aashirvaad flour, Sunfeast biscuits, Bingo snacks, Yippee noodles, Classmate notebooks, Savlon, Fiamma, Vivell. Every single one of these hugely popular brands, the stuff you probably use every day, belongs to the exact same conglomerate. Pretty mind-blowing, isn't it?
All right, part one, the hidden conglomerate, a 114-year-old giant hiding right there in your pantry.
Now, to really grasp where this company is heading, we kind of have to look at where it started. Way back in 1910, the Imperial Tobacco Company of India was founded in Calcutta. And, well, it was exactly what the name implied, a massive legacy tobacco business. But over the decades, it meticulously evolved. It dropped that old moniker and morphed into the highly modern, multi-sector powerhouse we know today as ITC Limited.
Moving on to part two, inside the ITC empire, the engine powering the transformation. The sheer scale of what they do today is frankly staggering. So their historical core of cigarettes with famous brands like Gold Flake is still the largest profit contributor. It's the cash cow, paying the bills. But they are everywhere now. They dominate fast-moving consumer goods, or FMCG, with pantry staples like Aashirvaad. They run a massive agribusiness pushing global exports for wheat and spices. They've got a colossal paperboards packaging and printing arm. Add to that their information technology sector via ITC Infotech, and, of course, their luxury hotels division, which was recently demerged into its own entity. It is a heavily, heavily diversified empire. So, what does a six-segment empire actually look like on paper? Well, for the FY 2025-26 period, it looks like roughly 89,913 crore rupees in revenue. Just let that scale sink in for a second. That is a massive financial foundation, and it's literally the fuel for this entire story we're exploring today. And out of that massive revenue, they generate an incredible net profit of about 21,018 crore rupees. The takeaway here is that ITC isn't just making money, they are generating an absolute geyser of cash flow. And a lot of that is being driven by double-digit growth in their FMCG business and really strong performance in consumer products. This cash engine is the only reason their crazy ambitious future plans are even possible. Plus, on top of all that, they maintain a total dividend of 14 rupees and 50 paise per share. Meaning, even while they are completely rewriting their corporate DNA and going through this massive rebuild, they remain super profitable and incredibly attractive to investors. They are basically paying their shareholders handsomely while reinventing the whole shebang. Okay, part three, the 20,000 core future bet. Pivoting away from tobacco toward a wellness and tech future. Think of it like this. On one side, you have the legacy, cigarettes and tobacco. It's what built the empire, sure, but on the other side, you've got the future, food tech, artificial intelligence, and wellness. This isn't just some subtle branding shift. We are talking about a total reimagining of what a consumer goods company can be between 2026 and 2030. Consumer habits are rapidly pivoting toward healthier, smarter products, and ITC is looking at this as their absolute biggest long-term opportunity. And to actually make this giant leap, ITC has announced a medium-term investment plan of roughly 20,000 crore rupees across its businesses. They're not just, testing the waters here. They are diving in headfirst to accelerate this expansion. Let's actually break down where this mountain of capital is going. First step, rapid FMCG acquisitions. They've been snapping up brands like Yoga Bar, 24 Mantra Organic, Mother Sparsh, and Persuma. And these aren't just random shopping spree purchases. They are highly calculated, highly targeted acquisitions focused heavily on organic products, personal care, and premium positioning. They are essentially buying the primary growth drivers of tomorrow's ITC. But they're not stopping at the grocery aisle. Oh no, they are building directly into the digital economy. ITC is pushing incredibly hard into food tech and cloud kitchens. They're expanding online fresh food delivery, zeroing in on ready-to-eat meals, and building out their own digital ordering platforms. Actually, they already run dozens of cloud kitchens, and they're planning a huge rollout across India. They don't just want to sell you the raw ingredients anymore. They want to cook the food and deliver it right to your door. And of course, they are pouring funds into sustainability and digital transformation. Their paperboards division is aggressively funding eco-friendly packaging and recyclable materials. This is a massive segment, expected to be a major growth engine moving forward. At the same time, management has made it crystal clear technology is the foundation of their future. We're talking AI integration, totally digitizing their massive supply chain, deep data analytics, and smart manufacturing. They're building a highly modern, ruthlessly efficient machine. Which brings us to Section 4, roadblocks and market risks. Because what exactly stands in the way of this transformation? Well, first and foremost is the elephant in the room, tobacco regulation risks. Remember, cigarettes still pay the majority of the bills, so government tax hikes and increasing anti-smoking regulations pose a very direct, very constant threat to their main profit engine. This immense regulatory pressure is exactly why reducing their tobacco dependence isn't just a fun side project for them, it's an absolute strategic necessity for their survival. Secondly, it is a total dogfight out there. They face incredibly fierce competition and serious inflation. When ITC pushes into FMCG, they are going head-to-head with established titans, Hindustan Unilever, Nestle, Dabur, Britannia. It is a crowded, cutthroat market. Throw in the constant threat of raw material inflation like the rising costs of edible oils, packaging materials, and logistics, and executing this total FMCG takeover is definitely going to be far easier said than done. Finally, Section 5, the future of IT. It's all tied together. You can basically distill their entire 10-year strategy into this brilliant cyclical master plan. Step 1, maximize the massive cash flows and high dividends from their legacy tobacco brands. Step 2, take that massive pile of cash and invest it heavily into FMCG expansion, cutting-edge technology, and sustainability. Step 3, successfully reduce their overall dependence on cigarettes. It's an absolutely fascinating strategy of literally using the past to foot the bill for the future. As we wrap up this explainer, I really want to leave you with this final, provocative thought to chew on. Can a 114-year-old company built entirely on a legacy of tobacco actually pull off the ultimate pivot to become India's biggest health, wellness, and technology brand? Because let's be real, they have capital, they have the strategy, and they are executing the plan as we speak. Whether they can actually win in the face of all this fierce competition is something the entire financial world is watching incredibly closely. Thanks for hanging out and learning with us today. Keep your eyes on the grocery store shelves, because this transformation, it's already happening right in front of us. Fascinating corporate evolutions, the story of ITC Limited. We're going to break down their current playbook, the massive financial engine driving them, and this incredibly ambitious roadmap they've set for 2026 and 2030. Honestly, it's a total masterclass in corporate reinvention. And getting a grip on this pivot, it's essential if you're into business strategy, market shifts, or even if you just want to know who actually makes the stuff sitting in your house right now. So here's the core tension we're tackling today. How exactly does a company founded way back in 1910 navigate today's modern, hyper-aware, totally health-focused era? Just think about that for a second. Over a century ago, consumer habits and regulatory environments were, well, practically from another planet. When you're a sprawling conglomerate built on a foundation that's now facing intense social pressure, you can't just stand still. You either adapt or you fade away. And, spoiler alert, ITC chose to adapt. Section 1. Beyond the tobacco roots. There's this profound paradox at the very heart of this company. When most people hear ITC, which, by the way, originally stood for the Imperial Tobacco Company of India, they immediately pictured legacy cigarette brands like Gold Flake, Classic, or Navy Cut. And to be completely fair, that segment is still their biggest cash cow. But what they actually do today, it's wild. They export wheat and coffee, they run a massive IT services arm, operate ultra-luxury hotels, and literally manufacture the paperboards used in millions of everyday deliveries. They are, quite literally, everywhere. They've basically built a fast-moving consumer goods, or FMCG, empire right under our noses. Seriously, ITC is deeply baked into your daily routine. You might make your morning chapati with Aashirvaad atta, snack on bingo chips, write your notes in a Classmate notebook, or wash your hands with Savlon, totally unaware that you're engaging with a legacy tobacco giant. They've successfully bridged the gap from this distant, historic conglomerate to the actual products sitting in your pantry right this second. Section 2. Unpacking the massive numbers for financial year 2025-26. Almost 90,000 crore rupees in revenue. That's 89,913 to be exact. Take a second to let that jaw-dropping top-line figure sink in. This massive number is driven by a really rare dual-engine setup. They have this incredibly consistent cash flow from their legacy cigarette business, and they pair it with double-digit growth in their everyday consumer products. Seeing that kind of synchronized growth across completely different product categories, it's rare, and it's incredibly powerful. But hey, as the saying goes, revenue is vanity, profit is sanity. And with roughly 21,018 crore rupees in net profit, ITC has the absolute financial fortitude to pivot aggressively. While most startups are scrambling for venture funding to change their business models, ITC is just using its legacy cash cow to organically fund the research, the infrastructure, and the acquisitions they need to completely reinvent themselves. And the thing is, they don't just hoard all that cash. They pair these profits with a highly generous total dividend of 14.50 rupees per share. This is such a brilliant strategic move. By maintaining high dividends, they keep their investors super satisfied and patient, which buys management the time they need to diligently build out the entire infrastructure for the next generation of the business. Section 3. The 20,000 crore blueprint. Okay, so this is their medium-term investment blueprint. 20,000 crore rupees aimed squarely at accelerating expansion far beyond their original roots. Now, this isn't just basic maintenance capital to keep the lights on. This is serious growth capital. It's meant to permanently alter the company's DNA. They're actually executing a two-pronged strategy here. First up, rapid brand acquisition. They're out there snapping up fast-growing modern brands. Think Yoga Bar, Mother Sparsh, 24 Mantra Organic, and Persuma. Second, they're dropping heavy capital expenditure into future-proof sectors. We're talking eco-friendly packaging, artificial intelligence, supply chain digitization, and smart manufacturing. Tech isn't just an afterthought for them. Management has explicitly stated that technology is going to be a core pillar of their future growth. And as part of this, we're seeing a really unexpected push into food tech. ITC already operates dozens of cloud kitchens across India, focusing on fresh food and ready-to-eat meals, all totally connected through digital ordering platforms. Basically, they're taking their decades of expertise in the food industry and tweaking it perfectly for the modern, app-driven consumer. But get this, management actually considers their pivot to nutrition and wellness as their absolute greatest opportunity. Yeah, you heard that right. A company historically known for cigarettes is making its biggest bet on organic foods, healthy snacks, and wellness products. It's a deeply ironic yet strategically brilliant move, perfectly aligning the company's future with the most dominant consumer health trends of the 21st century. Section 4. Roadblocks and risks. Now, we definitely have to acknowledge the elephant in the room. Like we talked about earlier, their largest profit contributor is still cigarettes. And that segment, it is highly vulnerable. Every single time there's a government tax hike or some strict new anti-smoking regulations roll out, it threatens the exact cash flow that's funding this whole massive FMCG expansion. So it's a very delicate, ongoing balancing act. Plus, as they push deeper into the FMCG space, it's not like they're entering an empty room. They are facing absolutely fierce competition from established titans like Hindustan Unilever and Nestlé India, not to mention incredibly aggressive domestic challengers like DeBoer and Britannia Industries. Look, to win market share away from these giants, ITC's execution has to be flawless. They simply have to innovate faster and market better. They also face the very grounded economic reality of raw material inflation. The rising costs of basic, everyday inputs like edible oils, alongside surging costs for packaging materials and logistics, are constantly threatening to eat right into their profit margins. Managing those crazy supply chain pressures is literally a daily battle for their operations teams. Section 5. The long-term outlook. Looking at their century-long journey, the trajectory is pretty clear. From a legacy entity back in 1910, moving through this current phase of aggressive diversification, it's all leading up to their vision for 2030. Within the next 5 to 10 years, they aim to be a totally unrecognizable, multi-sector powerhouse heavily focused on tech, food, and sustainability. And honestly, they've got the strong cash flows, the market share, and the immense capital required to actually make it happen. So this is the ultimate question you should take away from this explainer today. We are watching one of India's most closely scrutinized conglomerates attempt to completely invent its own future. Can they really overcome the heavy gravity of their past and the fierce competition of the present to become a true champion of tomorrow's health and wellness landscape? The strategy is in place, the capital is deployed, and the execution phase is happening right now. It is going to be absolutely fascinating to watch this play out.